We're going live.
We're going live. How's everybody doing? Happy Friday.
Happy Fridays, right? Doing good. It's another week down, and I'm just still trying to figure out how many episodes we did, but we're going live.
Between 25 and 30.
All right.
25 and 30.
I laughed. We went back. It was like 15.
Yeah. We should actually take a look and see what the first week was that we did this. I'm not sure if there's a way to do that, but that'd be cool to kind of see.
Yeah, for sure.
I don't remember either. I feel like Cali's been between 25 and 30 for like the last 5 weeks. So.
No, I was between 20 and 25 last week, I think. So I think we're probably like 25. Let's put some money on this.
Yeah. So I mean, it's another week, another things going on. Oh, we lost Brad.
One down.
Just me and you, Cali. So let's just talk about our weeks. We got some deals going on. Let's just talk about that.
Yeah, man.
Yeah. So, anyways, did you want to do a little intro, or what are your thoughts?
Yeah, I like the opportunity to introduce and kind of let people know why we're doing this and the whole purpose behind it. So yeah, I'm Cali Braithwaite. I'm out of the GTA. I'm really focusing this year, 2021, on flips and assignments. Each quarter, I'm trying to grab a long-term buy and hold, just so I'm still diversifying. But most of my investments are in the GTA right now, also in Moncton, thanks to my good man, Shawn. And if you do want to reach out to me to discuss some of the deals that I'm working on and how you could get involved, because I'm always looking to work with other people, there's my information below, 289-207-5316 or at Grow with Cali. And I'd love to share with you what I'm up to and hear what you're up to and see if there's some kind of opportunity for collaboration.
Yeah, for sure. Brad, well, we got you here. You want to do your intro as well?
Yeah, sure. So I'm Brad Plume. We're mainly focused on investments in Grey and Bruce County, as well as the Tri-Cities, Kitchener-Waterloo, Cambridge. Actively doing flips, as well as actively looking for buy and hold properties. And we're just moving into some joint venture partnerships in regards to those buy and holds. So if you're in those areas and you want to hit me up and chat a little bit, feel free. Info's on the screen there. Love to connect with you guys.
Awesome. Alex is joining us from his office today, so that's
right.
So we were just doing our introductions there. Alex, did you just want to go and introduce yourself here quick?
Me? Yes.
Yeah.
Sorry, guys. I'm just connected to the audio too. Hi, guys. Alex Mustatea, real estate investor based out of Hamilton. I guess I'm doing projects Toronto, GTA, Hamilton, and then moving more towards southwestern Ontario, Chatham region as well. Focused on flips and multifamily conversions. Always happy to connect with anyone interested in getting in the game. I can be reached at 289-769-8975 or always on Instagram, alexandru.mustatea.
Awesome. And, of course, I'm Shawn Gunther from the Moncton, New Brunswick area, and we're always looking for people to join the team, and we're always looking to connect, and we keep losing people going back and forth. So always looking for, anybody else that's looking to invest here. So if you are looking to buy, sell, or invest here in Moncton, New Brunswick, I'd love to talk to you, and you can get a hold of me at 506-800-4289. On Facebook at Shawn Gunther or on Instagram at the Moncton. So, how's everybody doing?
Awesome, man. How about you, Shawn?
I'm doing good, man. I'm doing good. I had a good week. A little bit started off a little rocky, and then ended up turning around quite a bit. We were having a little bit of slow going on getting deals and stuff like that. And then all of a sudden I got a few right in a row. So
who's got the deals?
Well, I mean, it's so competitive now with this hot market. It's kind of hard to to navigate sometimes, right? Like, I mean, when you come back and you're like, okay, well, talking about it, I think this is kind of what we were going to discuss anyways, is like how we're coming up with these deals and how we're analyzing them and, actually creating that deal and getting somebody to bite basically on the purchase price that we need to get it at. Right. So, I mean, it's difficult and it's tough to navigate that when it's such a hot market because the prices are moving all the time. It's like trying to hit a moving goalpost. So, I mean, what about you guys? Like, what have you done or what have you found that's been, helpful in working in this hot market when you're analyzing properties?
I think if I were to say anything is that I'm getting closer and closer to that sweet spot of being able to make a decision on a potential deal, having only 60-70% of the information as opposed to seeing the outright clear path on how I'm going to execute on that deal. And it's interesting because, well, it would have been nice if Brad was still on. But anyway, this confidence comes from a real estate investment point of view. It has nothing to do with my background in construction or whatever, like renovation. That's not what I'm even talking about. I like the thought of getting into some of these deals without even considering how I would physically execute on the construction end of things, but know that I have somebody that will do it faster, clearly at a much higher cost than I would do it if I did it by myself, not allowing for my labor, and I'm fine with that. So I think that's just part of the growth or just the confidence from just a real estate investments point of view, not a construction swing the hammer type deal, or how am I going to remove this wall? What's involved in that? It becomes irrelevant.
Mm-hmm. Yeah.
So you're basically finding it easier now, Alex, that you're able to look at a deal, to analyze it, removing yourself from being the guy doing the work or putting yourself in the guy's shoes who's doing the work. You're looking at it now solely from connecting the dots, finding the opportunity, knowing that someone is going to invest in this opportunity with you and finding a way that you can make a profit at the end, right? Without getting too emotionally attached to it.
Well, yes. And I think the reason that I'm able to do that is I'm starting to finally appreciate how much more my time is worth to raise capital, find deals, build relationships than it was me doing the renovation as a form of keeping costs down. Now, I got to be honest, the market being still hot, it helps. You can almost, I don't want to do that, but sometimes you can kind of rely on the fact that it is still going to carry you a little bit. So even if you run into some cost overruns, that's a separate animal, but you're realizing how much more valuable your time is. And because of that, you now start looking at deals with a whole different mindset does it make sense, give or take $20,000, $30,000, whatever that, like a 20-30% premium for a general contractor to do similar work to what I would do myself. But being on my own, not doing this for a living, I'm not a carpenter. So any carpentry that I do takes 10 times, 3 times, 5 times longer than a guy that's been doing this for 20 years and does it day in, day out. So I think that is part of it, but I wouldn't want anybody to think that you need to have a renovations background to be able to make these decisions. It's more just confidence of real estate investment and the relationships that I've been building now over the past few months.
Okay. So would you say that you rely relatively quite a bit on your appreciation factor when you're even offering on properties or accepting deals?
I consider that, but that's a bonus. So to answer your question, very nuts and bolts question. I will get into a deal based on its current ARV. So in other words, if right now that house was renovated the way I would do it, what would it be worth based on comps? The fact that if it's going to take me 6 months and that property is going to further appreciate by 5%, that's just a bonus. But I get into the deal on today's market level as a minimum to try to mitigate the risk of it not going that high. Does that answer your question?
Sort of. And I guess it's kind of how are you mitigating that risk? Like, how are you figuring out what your fair market value is today? Because I can't imagine there are multiple properties within a block or whatever couple block radius that you're maybe purchasing property that have sold in a short amount of time, right?
I don't know if I need to put as much importance on proximity to my existing property when you're looking at comps as much as comparable neighborhoods. If you were to break down a city into ABCs or 1, 2, 3, whatever, highest to lowest, but you're going to find pockets. So it doesn't need to be down the street. It just should still be in a similar style of neighborhood.
Yeah. Like Ontario is very different from our market here, right? Like where I know that you guys will have neighborhoods that are, you go into that neighborhood and all the houses are roughly like the same. They're built near the same time by possibly the same builders. There's a lot of like cookie cutter situations happening where it's a little more difficult for us here, where it's no house is really the same. Like you'll have a bungalow in like an area where there will be some bungalows here. But other than that, like there's very, very different style houses. So it's very difficult to come up with like an apples to apples comparison. So, and with the market being hot lately, like a lot of the information that I get is outdated, right? Yeah. So if I'm going to judge my ARV, it's like, okay, you have to almost look for the 1 or 2 off ones that are off that have been sold very, very recently to come up with what your ARV could even potentially be, right? And I think that's kind of that's almost a science in itself, kind of figuring that out, right? So, like, how is it that you guys usually go about doing that?
I can hop in there, man. So I think that there's always, and that's part of the element of risk, right? It's very hard. There's no exact science. Even if you have an appraiser come and do an appraisal, you have 2 appraisers, the numbers aren't going to be exactly the same. Very unlikely. So I think what we rely on is our experience, right? So how long have you been paying attention to the trends in this area? What Alex said, I like what he said about quite often we'll refer to areas as like A plus, B minus, B plus, whatever. So if you can find a B plus that's, I don't know, I don't want to say distances because someone might challenge me on that, but in every, maybe in Moncton, the radius is larger or smaller based off of like how large of a B plus area it is. Like some places, some towns or cities, you can go 1 street over and it changes from A to C, right? Even D. Like there's places that I know in Toronto that have that much of a drastic change. But back to, so for the most part, there is an element of risk, and I think a lot of it is generalizations, right? So not only the ARV, but I think if you look at and you use today's values, if you're getting a deal or not, because everything starts with the buy. You can't control the future. If the market takes a dip and it goes, the direction that you don't want it to go for your strategy, then you better have another exit, right? So I really like to get involved in a deal when I have multiple exits. Mm-hmm. So if I'm in a tunnel and there's only one way to get out of that tunnel, I'm not going that tunnel. But if I know that there's 1, 2, 3, even 4 ways to get out of that tunnel, then there's a lot less risk, right? So, that could be, again, being the first person on the deal. So being able to directly deal with the homeowner, deal with the seller is, I think, the best place to be, because you're starting at the beginning of the tunnel and you still have every single option there, right? You get a deal, you can wholesale it, you can wholesale it, you can flip it, you can burr it, you can convert it. Like if one doesn't work, you go to the other one. If the other one doesn't work, you still have 2, 3, 4, you know what I mean? So I think by getting in is what the most important thing is. So I would use the numbers based off of like comparables today. And if you don't know how to figure it out, talk to a realtor that works with investors, who's familiar with how to determine these numbers and do all that. But eventually try to get an idea, by experience, by just paying attention and seeing what happens.
100%. And I mean, it's just that's very, very I think that's very valuable to a lot of people that would be listening as well, right? Because I think that's a lot of people's issues today, and like that I see when I'm speaking to people too, and they just don't quite know how to kind of go about it. And I think Alex and you both actually gave some really good information as far as that. So hopefully that somebody will be helping somebody out by giving them that information, right?
Sorry, I'm gonna cut in. There's a lot of people. So I'm noticing a lot of people that are getting that paralysis by analysis, evaluating what it takes to renovate and whether or not it's worth it. And it's no different than exactly what I've gone through not too long ago. It just comes with experience. It does come with a bit of okay, I'm gonna try one. Like, am I in a position where I can risk some capital that's, if I lose it, it's not gonna bankrupt me, or it's not gonna kick my family out in the street.
Mm-hmm.
It's just gonna prevent me from, it's gonna blow my last 5 years worth of I don't know, something like that. Like, it's not the end of the world. It's not ideal, but it's not the end of the world. Take that chance. And when you see how things start to develop and that, no, you're not making quite as much, but you're still turning a profit, that's invaluable experience.
100%.
100%. So, like, for myself, if I'm evaluating a flip opportunity, very seldom will I get involved if I don't think there's another exit, right? So, like, that's just to mitigate my capital and whoever else's capital that's involved in the deal, who I have to treat like mine, right? Even better than mine, because that's so for me, I think that is one strategy that's helped keep me afloat and not have to worry and have sleepless nights. I have in the past got involved in a flip where the flip was the only way out, and that was the deal that stressed me out the most because I had no other exits, right? So it's like the haunted house. You don't know what's around the corner. You know what I mean?
Mm-hmm.
So yeah, that's just my kind of piece of advice for anybody looking to get involved in the flipping or whatever it is you do. I think know that you have multiple exits, and then that way you have those life vests, right?
Yeah. Well, and like that's another thing too. Like, I mean, with most real estate, there's usually more than one exit, whether you think there is at the beginning or not. Like, worst case scenario, what happens? You have to hold on to it and rent it out. You know what I mean? At least you're mitigating most of your costs and things of that nature. Well, as long as, you know what I mean, it's in an area that you have like relatively good rental market rent, right? But there's lots of different scenarios where there's multiple exits. Like, I mean, Airbnb is a big thing now too, and that's short term. Really, if you're you just kind of hold off for a little while. Like Keith was on here last week and he was talking about Airbnbs, and that just got me really pumped up too, because there's so much stuff. There's so much more involved with that than I ever thought there was.
Did Keith introduce you to the shiny object there, Shawn?
No. He gave me some ideas for some potential shiny objects, but I mean, I've been thinking about doing buy and holds in the future anyway. So, I mean, I think that if I had a multifamily unit or something like that, like to take one that's unrented for a short period of time, furnish it, and try it out as an Airbnb, I don't think there's much risk involved there anyway.
I think couldn't agree more with the multiple strategy idea. Just the one thing that I will caution, because I have seen a few investors that have gotten in with no capital and they started working with hard money. Make sure that if you need to execute second strategy of buy and hold, whether it's an Airbnb, have a bit of an idea on how you can qualify for cheap money, because you're not going to be able to cash flow even Airbnb with 15% interest once you're done the renovation. So find a way to burn it out, even if it's not a major cash flow, but at least cover your main costs. If the idea is to delay the flip by about a year, just to kind of let the market catch up. If you've gotten into a project where maybe you didn't buy as well or renovations ran a lot more, the second thing, maybe just hold on to it for about a year, renting it out. And then in that case, I would probably recommend Airbnb-ing it, because you don't want to have to deal with long-term tenants if you're going to eventually sell it. Before that year, be able to refi it out with conventional money.
Man, can you guys imagine if you get involved in a flip and you have expensive money for the flip, and you don't think of your exit strategies, or you didn't have any exit strategies, and then you have to decide, okay, I'm going to try and Airbnb this, but before I Airbnb it, I got to furnish the place. I got to put even more money into this place now that may not, you know what I mean? So I think the Airbnb strategy is a good one, but it sometimes I think ideally that wouldn't be for me the exit that I would want to, you know what I mean? I think that one there it's a possibility. It could definitely, in some market, let's say for example, like where you are, Shawn, I think it would be great, right? Because the cost of borrowing is whatever it is, but the rents in comparison to your expenses are a lot. There's a larger margin for profit. In the GTA though, our numbers are so different than what they are there, right?
Well, 100%. Like, I mean, you're talking apples to oranges there. Like, your buys
Ontario to New Brunswick
are $1 million. Yeah, like
well, so sorry, I'm going to backtrack a little bit. I suggested that strictly from the strategy being so that you don't have to deal with long-term tenants. But Airbnb is profitable after, I think, and this is where like someone like Keith could confirm this, after a little while, you're not going to hit the ground running without having superhost status. That you don't get that right off the bat just because you need to hold on to this property for a year. And if that's a knee-jerk reaction to Airbnb it, you know, like, maybe having some experience or getting the right person involved to either furnish it, stage it, whatever it needs to happen to get you to that high, like the high end of rentals, short-term rentals right away. By trying to do it yourself, if you have no investment experience and then you're trying to gain the investment experience as an Airbnb host after your flip screwed up, it's just kind of compound effect.
Well, I certainly wouldn't recommend it as like your life vest. But I mean, it's an option, right? Like obviously. Yeah, I think that anybody would kind of take it from the perspective like, okay, I need to flip this and, try to flip it, obviously. And like what's in a hot market, I mean, there's not really many scenarios where it's not going to sell, at least if you give it enough time. But worst case scenario, it doesn't sell. You rent it out or turn it into an Airbnb and try to recoup some of your money so you're just not bleeding funds. But, just like Cali was saying, like the difference in that happening in Ontario compared to it happening here when you're dealing with $1 million loans, and here you're dealing with a couple $100,000, like it doesn't really, it's a lot easier to mitigate that risk from here than it would be there.
Man, you guys just made me think of something. Another thing for people that are like, getting into investing and are thinking of buying like virtually in places that they've never been or don't intend on going or don't want to go often. I have made the decision to whenever I'm investing in other markets, I'm more or less investing in the people that are there who have done the work already, right? So Shawn's in Moncton. I'm comfortable investing in Moncton because Shawn has been paying attention to the market long enough to make me feel confident to start doing my preliminary work, but I'm not going out there and trying to manage a deal on my own and find a guy from here and do all that. Like you can totally do that, right? But I have a property in Windsor. It's a fourplex, and Windsor's not an area that I haven't decided to like scale there. But what I'm realizing, last week I had to go visit because we're trying to do some tenant turnover. And, I think we hear about it in training seminars and all this. Oh, you just go and you turn the cash for keys. That doesn't always work. Hello. So, what I would say is what I've learned from this experience, because this is very recent. This is like my weekly update, guys. Okay. So, I'm now, reconsidering how I want to invest and what markets I want to invest long-term, hiring. I have another property in another market in the Peterborough area. And I chose the property manager because they are an investor. They have multiple properties. They do a good job property managing, but they're not my partner. So I can't expect them to treat my property the same way they would theirs, because they just own the company that property manages, right? They're not the ones managing the property. They're managing the property managers that they, So I was talking to another investor yesterday who was thinking of investing in a distant market. And this is one of the things that I had cautioned them on is, hey, although there's a property manager who's a well-recognized investor, has multiple doors, they're not your partner. So they're not investing in that property with you. So they're going to hire the property. They have their property management company they run. Whoever is in charge is going to do what they do, but don't expect the same quality or same returns, especially when there's tenant turnover, to get property managers to do that for you. I don't have enough experience with property managers yet to say whether or not I have the confidence that they can do that. And I haven't given enough time to see how long it takes to actually do that. But I just do caution investors who are thinking of going into other markets to be prepared that it may take some time, right? It's not that it can't get done, but it just may take time. It may be extra money that you didn't really account for when you heard about it in a video virtual mastermind or something, and you thought, yeah, all I'm going to do is this, and this is it. No, that's the reality is the reality, So.
But I mean, given that, and I mean, you're right, of course, because you never know, and they're not your partners; they're a property management company. But at the same time, you should have like a benchmark of what you're looking to like earn or whatever from that particular property, and based off of whatever information that you have. And at one point, there's got to be accountability with the property manager.
Oh, right? For sure. Yeah.
Well, like if you're setting out benchmarks and saying, okay, well, you need to be at this, whatever, like giving them, your metrics that you're looking at, right? That's something you should be able to hold them accountable to if that's within the agreement that you guys discussed in the first place. However, in markets like yours, where it's pretty much the tenant gets in there and then can do whatever the heck they want to, there's only so much they can do, even. Right?
Yes.
But what is, to your point about holding them accountable, it's not, again, and I don't blame you for saying that, but if you're a brand new investor, you're from the GTA and you invested in Thunder Bay and you hire a property manager and you're not happy with him, you fire the first one, then you get another one, you spend another couple of months and maybe they disappoint you as well. If you've turned over two or three property managers in 1 year, chances are you're jaded. You're getting out of that market.
Oh, well, I'm saying if they're doing the job, just fire them because they're not exceeding.
I'm just saying, it's not as easy. Sometimes you can get burnt in the process, or you can almost feel hostage by the people you hire.
And you know what, guys? To add to this conversation, I'm happy with my property managers. But what I am saying is that when you're getting involved in a new area, a new market, or even as a new investor in your own area where you have a property manager, have the expectation to maybe expect that things might take longer than you would like to get the results, right? So be prepared, have that contingency set aside to know that, hey, this business might be operating at a loss for X amount of months before we start to see a profit. Right. But still keep them accountable, still kind of, let them know that what your intentions, what your goals are, but don't be surprised if it takes longer than what you expected. Especially if you've managed the properties yourself in the past, then now it's like, Alex, if you swing the hammer, right, and you see someone else, you're like, what are you doing, man? Like, get out of here.
Yeah, that's exactly it. Yeah. There's a lot of that happening.
So how many times do you micromanage your managers?
Right.
I can see
results. Yeah.
And I keep going back to this guy that did my debt. It took him over twice the amount of time he originally quoted me. He did a great job, but it just took twice the amount of time. He didn't do anything the way that I would have. And I'm just sitting there the whole time, I shouldn't be telling this guy how to do his business, but you know what I mean? I'm like, what is he doing? So I could see Alex being frustrated with a situation like that for sure.
If there's one recent example that I can make on that is my GCs I think they're doing a good job in the sense of quality. That I'm not going to point out necessarily any quality flaws, but so first of all, I may move a lot faster than I would have. That's a given. It's material, so there's no sense of economy here. I may decide to cut some drywall strategically so I can get the best use out of it. Not then, man. It's a brand new sheet all the time, and the rest is crap. So like little things like that.
Yeah.
You know, I like an example. You use a short piece of a 2x4 to offset the light switch from framing. So you usually just put like a 2-foot piece. I walk in and they put it up top to bottom. Or no, it was actually about 6 feet. It wasn't quite top to bottom. Sitting on the bottom plate. Why do you need this additional 5 feet, man? Do you use that somewhere else?
You know,
It's nailed on everywhere.
Yeah.
They just
nails in it.
they're trying to save time. They didn't want to make that extra cut.
You couldn't make that one cut and just put it there.
Well, Vince actually has a good question here. He's asking if we ever had any issues with lawyers on closings, like not meeting deadlines, etc. Like, I know from my experience, it was probably for a while, it was pretty well every other one. You know, whether it was, you know, really big delays or just a day or two is, you know, kind of, I've never seen anything over a week getting delayed. But I mean, you know, I wonder what your guys' experience is. Like, have you guys ever had like lawyers push it out like a lot further than you would have expected?
I've had, hey Vince, but thanks for tuning in, brother. I've had, you know, I don't know if I would say I have had instances where it was the lawyer who was just really not moving as quickly as I thought they could have moved, right?
It's a me thing to say.
I mean, but a lot of it too is sometimes it's the banks, right? Sometimes it's the lenders. And, you know, if you're working with a mortgage specialist with a certain bank, there's channels that they have where they sometimes don't even communicate with, like, once it goes to the funding department, they might be say the mortgage specialist that you're dealing with might have been told, hey, this thing it's been instructed like on Wednesday, but you call your lawyer and the lawyer still hasn't received anything on Thursday or Friday. You're like, what? Someone's lying to me here. What's going on here, right?
Yeah.
I found. Go ahead.
Well, it can just end up like a game of telephone, right? Is what I found. Like, I've had some closings where it's like I'm talking to the seller's telling me that her lawyer told her one thing, and then I talk to my lawyer's telling me a completely different thing. And it's like, okay, well, something's getting miscommunicated here at somewhere, or somebody's lying. It's like one or the other, right?
Right. And one thing that I've done, Vince, is I've just like I've used many lawyers, and I'm always looking for the lawyer that, like, I don't really give a chance. So once the lawyer does something to, like, that I feel like they could have done differently, and it jeopardizes my deal, or the communication isn't as good as I'd like it to be, then I'm usually looking for another lawyer. And right now, because everything is virtual, it's very easy to have the best lawyer that is, you know, willing, that meets your criteria anywhere in the province. You don't actually have to be in the same city or town, because you never really have to be in that office, right? So we actually have an advantage now to, like, connect with a lawyer that we really connect with, right?
I guess to answer that question, Vince, no, I've not had anything delayed per se, like when days, weeks, none of that. Definitely, certainly not my lawyer. I highly consider my lawyer part of, you know, my power team, and somebody that I very much enjoy working with. He's never delayed me in any way. If anything, it was the seller's lawyer that delayed keys. Like, it was one of those things where I ended up waiting in front of their office to pick up the key, or so it was minimal. But I ended up working with this lawyer that I'm working with now as a result of a previous lawyer that was highly recommended, telling me that they can't close on a deal that I had 2 deals. I was buying and selling all within 3 to 4 weeks, and they said that they can't close the deals. And it really irked me, because we had a detailed conversation. He understood where I was going, and it felt like this is somebody that wanted to, you know, nurture that relationship, because there's going to be a lot coming in. And then he comes back and tells me he can't close. Like, this is pretty straightforward, especially on the sale. On the sales end, lawyers have even less to do. They don't need to do title search. But yeah, he told me he's too loaded. He can't help me. So I found this other lawyer, and I've been working with him for the last 2 years, and I see no reason to move.
Yeah. It's Especially as long as they can take on the load that you're giving them. It's not a big deal.
He's jumped through hoops. He's sending me emails on Saturdays. He's not, I mean, not that he's not billing me for it, but no, he's not like on responding to an email. I think that would be silly. I think his rate to close on a deal might be slightly higher, but it's insignificant to the amount of value that I actually get from him.
100%.
That's huge. Yeah. Like you, Alex, like I had a lawyer, and I still would consider, I would say that I still have a lawyer who is part of my team, where he was very consistent and very reliable while I was just doing simple deals. Once the deals started getting more active, like any kind of assignment or, JV, it just, the contracts started to get, like, I could sense his fear, and he's not an investor. So I realized that for me, I gave him the opportunity because I liked him. Like, he's the kind of guy I can call again on the weekend. I can text him. I can, he picks up his phone, right? I have him on, like I have a cell phone, his direct number, right? But I just started to realize that his comfort level was impacting how I was assessing deals. Like, he was making me afraid to do deals, right? Which there's value to that. But then once you understand your risk and you make the decision to proceed, you know that this is a smoking deal, but he's like talking you out of it, that I'll use him for certain deals and for other deals. So I had to find other new lawyers since then, right? For the type of deals, like the active deals that I'm doing where there's joint ventures and things like that.
For sure. I think that's part of their job too, though, is to mitigate your risk, right? So it's
For
difficult
sure.
to really see what it is that we're doing. They're all like, kind of worried about how they're going to mitigate the risk, as opposed to you just, taking a calculated risk.
That's why it helps if they invest, because they understand the risk and reward, right? Not just the risk.
100%. But we are past our time here, so if we want to just wrap it up here, I don't know if you have anything else to say that's pertinent here, or if you guys just want to do a little bit of a sign off, or what are your thoughts here?
I think we're good, man. Yeah, this was a great weekly update. Man, I'll just kind of say my little thing real quick. Thanks everyone for tuning in. I'm Cali Braithwaite out of the GTA. Currently investing in Southern Ontario and in Moncton, New Brunswick. If you have a deal or you want to talk to me about some of the deals that I have going on and how you want to get involved, I'd love to connect with you. Always looking to expand my network. You can reach me at 289-207-5316 at Grow with Cali on Instagram.
Awesome.
I'll jump in. Alex Mustatea, based out of Hamilton. I'm focused on flips and multifamily conversion projects through the GTA, Hamilton, and then most recently in southwestern Ontario, Chatham area. I'm always looking for, as Kelly mentioned, the opportunities to expand my network. If you're active or a contractor, and we're scaling up in the Chatham region, we could always use more talent there, boots on the ground. I can always be reached at 289-769-8975 or on Instagram, alexander.mustatea. Also, thanks, Vince, for tuning in. Appreciate the question.
Awesome. And I'm Shawn Gunther out of the Moncton, New Brunswick area, and we're always looking to expand. So definitely, if you're looking to buy, sell, or invest here in New Brunswick, give me a shout. We could be reached at 506-800-4289. On Instagram at the Moncton Home Buyer, or on Facebook, just Shawn Gunther. And so thanks again for everybody for joining in. Vince, thanks for joining in the combo. And I hope to see you all again this same time next week at Friday on 3 p.m. Eastern Standard Time. And take care.